8, 9, 10.
Site at home, European portal.
Morning, everybody. This is Squawk Box on CNBC Europe. It is Wednesday, 23rd of May. I'm Geoff.
I'm Simon Hobbs. Good morning. Big day over in Germany. Full figures from Deutsche Telekom and T-Online, and the possibility, according to the Journal, that T-Online is heading for Excite at Home's European operations.
Good morning, everybody. I'm Guy Johnson. We've got a little note here from Merrill Lynch talking about a lunch that Infineon CEO did yesterday, in which he reduced his expectations for the current quarter and the fiscal year.
Good morning, I'm Shelly Karabell at the Bolsa in Madrid. Zara's parent company Inditex starts trading this morning. We should see a lot of activity and some pretty high prices.
Okay, let's tell you what we're worried about this morning. Électricité de France set to cause uproar in Rome. The French utility will reportedly today announce it's now Montedison's largest shareholder. Rome says EDF should stay out of Italy's market as France's power sector remains closed to foreign competition. US auto giant Ford is taking a $2.1 billion charge after confirming it will recall 13 million Firestone Wilderness tires. That decision comes after analysis shows a substantial failure risk. That is Ford's own analysis. And the European Central Bank is expected to leave interest rates unchanged at today's meeting. That's against a background of strong German and Italian consumer price inflation and falling business confidence in the Eurozone's largest economy. Over in the States, the Dow fell yesterday for the first time in 5 days as the Nasdaq Composite hit a 6-session winning streak. But technical analyst Chris Locke thinks share prices are currently too high. We'll get the outlook from Chris Locke. He is the managing director of Oystercatcher Management. He will give us a technical perspective live from Amsterdam in about 40 minutes' time. Also up on the show, despite high-profile warnings by Sun Microsystems, Hewlett-Packard and Dell that the decline in US IT spending will spread across the Atlantic to Europe, a survey commissioned by Microsoft argues the outlook is more positive. We will talk about that with Simon Witts. He is a vice president for Europe, Middle East and Africa at Microsoft. He'll be along in about 50 minutes' time. Deutsche Telekom posting final first quarter results today. The focus will be on how its divisions have performed with T-Mobile under close scrutiny. We'll have a look at the numbers with Friedrich Altman. He is a telecoms analyst at Hornblower Fisher. He'll be along in about an hour and 20 minutes' time. Diego Garcia Loigori, portfolio manager at Pentor, will join us live from Madrid a little later on in the program to talk some more about this Inditex initial public offering. He will give us his perspective. And Brian Roberts, retail analyst at Retail Intelligence, will be along to give us the general view or the general outlook on the retail environment for Europe going forward. He'll be along in about an hour and 35 minutes' time. Let us introduce our guest host. Philip Manduca is with us for the next 2 hours. He is Head of International Investment at Dexalt. We've been having a chat before the show started. Philip looking at putting a bit of money into Japan at the moment. Has he missed the boat, or is he at the front of a rising tide? We will spend a bit of time exploring that and Philip's take on the world. Let us catch up immediately with this Inditex story, though. It is the largest initial public offering in Spain ever. Shelly Karabell, our Paris bureau chief, has made the trip down to Madrid. She joins us now live from Madrid. Shelly, nice to have you with us this morning. So, by all accounts, the numbers look very good, and I guess everybody at the Madrid bourse is expecting this one to get away with flying colours.
Yes, as soon as the bourse opens, I'm sure we're going to see that. Trading is due to start at about 11:30 this morning Madrid time. That would be 10:30 London time. Now, due to some new IPO rules here in Spain, there is going to be an hour of pre-trade, like just before the opening, so it could be delayed a few minutes while the market settles down. We're expecting that kind of pre-trade gray market price that could go as high as 18 euros a share. As you mentioned, the price was up at 4.7. That was the high end of expectations for pricing. And in general, that's kind of been very good for the bourse because we're so used to seeing all of these internet stocks and telecom stocks that are going through IPOs coming in on the low end and then not doing well, and that's not what's expected here.
Shelly, if there are any question marks surrounding the company, what are they? What have you been hearing, perhaps away from the cameras?
Well, there are a couple of question marks. The big one is the way in which they manufacture. Now, as you know, their time to market is roughly 3 weeks. Most people can do it, like the Gap, for example, or H&M. They've got about a 3-month lead time, and that's considered short in the retailing business. The manufacturing is done in small workshops in the northeast part of Spain and in the northern part of Portugal. And there is some question out there as to whether all of the social charges, et cetera, all of the taxes could be paid. And that could be an issue in terms of whether or not the EU will look more carefully at how these are set up. And if, in fact, things are not exactly as they need to be, that could be an issue for the company a little bit down the road. But in general, Zara has been a very, very successful model. The IPO was actually pushed by the market, not by the company. The company doesn't need the money. The market would like to get a share of a company that's doing extremely well. It's been family held for nearly 40 years. As we said, it doesn't really need the money, but the markets would like to get part of the action of a company that's doing well, that has a business model that's understandable and is real and tangible and not in cyberspace.
Yeah, I guess there is an issue about the extent to which Inditex is being helped, or at least given a certain backwind by the strength of the Spanish economy, if you like, and the money that seems to be floating around Spain at the moment that's coming into Spain because people don't want to change it into euros in their other areas. The so-called black economy effect, I guess. I mean, we probably can't talk too much about that, but there is the Spanish growth issue here.
Well, there certainly is. I mean, Spanish consumers have had a lot more money to spend recently. We're seeing that in terms of the incidence of the upswing in luxury goods. Loewe, for example, has done very well this year. That's part of the LVMH empire. It's a Spanish company that belongs in that group. Spanish consumers have a lot more money to spend. They've been spending a lot more. But Zara being the jewel in the crown for Inditex, has done extremely well internationally. It makes a lot of money in London, throughout the UK. It makes a lot of money in the US. It makes money in Argentina. It's not doing too well in Germany, but so there's still some issues to straighten out. But its business model has been very good. You can't really argue with success.
Shelly, thanks a lot for that. Shelly Karabell joining us live out of Madrid. We'll go back, obviously, and talk some more about this later on the programme. The 65-year-old charismatic founder of the company walks away with over €1 billion after this. We'll talk a little bit about his role in the future of the business at Inditex. Some numbers out of Germany. German GDP rising 0.4% against... you know what, that's not clear to me. Let's, I'm not quite sure what the other figure in there was. German April PPI, anyway, rises 0.5% month on month. That much I can tell you. Let's pop up some more data. German first quarter year-on-year GDP growth, lowest since... yeah, you know what, that doesn't make too much sense to me. We're giving the wrong kind of comparisons here. Let me read it straight from Reuters and tell you exactly what we've got. First quarter GDP up 0.4% against the fourth quarter seasonally adjusted figure up 0.2%. I think the general trend here is continued relative weakness. We've seen the inflation issue highlighted in recent data coming out of Germany. Clearly that CPI number yesterday has rung some alarm bells. It's a subject we need to talk about, and we've got an ECB meeting today, so that gives us the perfect excuse. Before we get on to that and get ahead of ourselves, let us just bring you up to date with how the US finished its session. And you know what? We had a better NASDAQ close, but it seemed to me there was a lack of conviction in that market yesterday.
Really? I was actually on holiday, so certainly there seems to have been a bit of a switch back, Jeffrey, to be honest with you, back from just reading through what everybody was writing and the way in which the stocks moved. There was a switch back out of some of the big blue chips, Merck, Alcoa, the aluminium producer, and back into technology. After the close, Computer Associates came through. And obviously, there's a lot of controversy over the way in which they process their numbers. But fiscal fourth quarter earnings, if you exclude the acquisition charges on the face of it, beat Wall Street's expectations. They earned $274 million, 47 cents a share. Wall Street was looking for 46, and the stock rose to $33.39. That's the last trade I have on the internet. So a good bounce there. Also a good bounce from, again in the software area, the personal and business accounting software maker Intuit. It traded up to $33.87 from a close of $31.15 after it said that its pro forma earnings grew 53% for its third quarter. But it did warn the 2001 revenue would fall at the low end of the range that it gave earlier in the year. But a lot of people thought that it might actually fall off the end of that range. So the fact that it was still just at the low end was sort of better news than many were expecting. So, as I say, the shares did reasonably well. On the futures market, we're actually now trading just still below fair value. Fair value on Nasdaq 100 is 2046. Fair value on S&P 1313. So we're flat to negative at this very early stage. This is what Jeffrey was talking about. Maybe the Nasdaq did lack some conviction. It was, excuse me, up some 8 points by the close. As I said to you, Dow Jones Industrial Average down in negative territory, losing 80 points, led lower by the likes of Alcoa, Merck, International Paper, and AT&T. Some of the financials did well, on the basis that you're going to get these lower interest rates feeding through to the consumer. So Citigroup was up, American Express also trading substantially higher. The Nasdaq, up 8 points, as I said to you earlier. I mean, if it lacked conviction, Geoff, maybe there's a good reason for that. Actually, it's now up 40% since that 2.5-year low that we reached back in April. 40% is one hell of a rise to get on the composite, and it was the likes of Cisco that drove us higher again yesterday. Oracle was down a bit, but Palm Computer regained after the recent difficulties in the wake of its earnings and earnings announcement. On the bond market yesterday, well, short-dated US Treasuries rose, that has to be said. The long bonds backpedaled off the 4 days of gains that we've had there, a belief perhaps that we're coming to the end of the interest rate cutting cycle, that perhaps inflation, as they keep trying to reassure us, isn't as bad in the United States going forward as many might have predicted. 5.4 therefore the yield on the 10-year, 5.77 the yield on the 30-year. One thing I would say to you, Geoff, is that PPI figure that you flashed up earlier looked very strong to me for the Eurozone. We're still trading at 86 US cents 47. There hasn't been much of a reaction there on the euro. Obviously, the European Central Bank, Geoff, is meeting today with this strong inflation as the backdrop against, of course, lower consumer confidence. Do just check on where we go with the yen today. This yen strength is beginning to build as we come into the beginning of European trade. The dollar is falling against the yen really quite dramatically. 121 yen 23. 12 minutes past 8, Geoff, back to you.
All right, sorry, I missed that. You were saying you thought what looked strong?
The PPI figure. I thought we were looking for a rise of about a third of 1%, and we got a rise, I think you were saying, of a half of 1%. Yeah,
I don't know, I was reading it from what was on the screen.
So the German PPI figure, the producer prices are growing very fast in Germany. And after yesterday, of course, we had the Brandenburg figures, which is the first indication of where we might be going with May inflation. That's really quite scary if you're a central banker.
This is the conundrum, isn't it, Philip? Let's bring you in on this. Just to make it clear, these GDP figures do look a little weak for the first quarter. They really complete a picture of an economy that appears to be in a certain amount of decline. The costs are rising. That's coming through from the CPI and the PPI data that we're seeing. There doesn't seem to be a positive story here. Am I just being too negative about Germany at the moment, or is it really starting to slow very rapidly?
Not at all. You've got a situation, I think, where you'd be surprised if there was a lot of strong growth coming out of Germany or anywhere else in Europe, for that matter, out of the major economies in Europe, because you haven't got a pro-growth central bank behind it, let alone have you got a unified economy, the European economy. It's not unified yet. It's an ethereal matter as far as its homogeneity is concerned. And as a consequence, you're going to see an awful lot of disparities and discrepancies within all the data in that region. My biggest concern, though, doesn't lie with Germany. We all know the German problems and the structural problems there, not least of which is that it comes down from unemployment, which is still running very high, down to consumer spending and general optimism, to the fact that the European Central Bank doesn't seem to understand the global picture here. And the global picture here is one very much of disinflation, maybe deflation, and slowing economic growth.
Hang on, it's very easy to bash the European Central Bank here, but they're following their remit. They're doing what they're supposed to do. They're keeping their eye on inflation and they're controlling interest rates on that basis. What about the regional governments? They should be increasing the pace of structural reform, and they should be adjusting their fiscal policies according to the pace of growth in their economies, shouldn't they?
Well, you're quite right. There are two shoes to drop here, and one of which is the political shoe or the fiscal shoe, and the other is the monetary shoe. But just dealing with the monetary issue, you have to answer the question if you're begging the prognosis. Why should the central bank ease aggressively? What does it need? 2 to 2.5% real rates of interest to protect against any inflationary growth. Surely they should be coming down much more to a neutral path or even slightly positive path in terms of interest rates over inflation. And they've got a lot of room to move, not just quarter points, but real full percentage points before they're still at a premium to the inflation rate. So there's a lot of room there that they're not taking up to promote growth, and hence the unemployment rate remains structurally very rigid and very high. On the fiscal side, I agree with you. Governments should be acting more aggressively. They're not. They're looking at their own domestic problems, and it's a function of the fact that it's very difficult at this moment in time to issue a lot of debt cheaply to promote fiscal reform and create the funding necessary. And there's a balanced budget movement or motion out there, which, of course, is playing against fiscal push in Europe.
Philip, we'll come back to this. We'll bring in a fixed income fund manager and we'll get some views on this ECB meeting and also where we're going with the euro and some of these other instruments. We need to spend a bit of time on Kingfisher as well. Trading statement due from Kingfisher. What on earth are they doing with Superdrug and Woolworths? We'll get Guy to talk about that when we come back. Stay with us. We'll be right back. Got any questions for any of us here on the programme? Send them in this morning. Want to hear from you.
Good morning, everybody. Welcome back to Squawk Box this fine Wednesday morning. Plenty to talk about here in Europe this morning. One of the big stories, I suspect, of the day for the UK and probably for much of Europe as well, because that's where a lot of its portfolio is Kingfisher. It's come out with a trading statement today. The interesting thing is going to be the AGM a little later on. Well, Geoff is going to be speaking about the company. Basically, what we've got here is that Kingfisher's come out this morning and says it's in advanced talks on disposals. Now, these disposals relate to Superdrug and to the Woolworths business. Now, the company says that it's in advanced talks on both businesses. The key thing here is how much money are they going to get for them. In terms of the Superdrug business, they're in talks with Kruvat, basically saying, well, basically the speculation is that they may not get as much money as they had originally hoped for from Kruvat, for the Superdrug business. They'd originally hoped for 300 to 350 million pounds. We now understand that it could probably be as low as 220 to 270. That is according to sort of market rumor. Anyway, advanced talks. There was some speculation over the weekend, and you wonder who fed this in over the weekend into the press, that we may get an announcement today on a successful sale of one of the two businesses. We are talking about Kingfisher going to some VC guys, and we're talking about the Superdrug business going to Kruvat. So we don't have any announcements on those. What I really want to talk to you about is, though, what is going on with the company, because what we've seen is that back in September, the company announced that it was going to basically split itself up and sort of form new Kingfisher and then spin these two businesses off. Now, what you've got to remember is basically back in, what was it, April 99 there, what we had was them doing a deal with Asda. That deal, which was basically sort of headlined, I don't know if you remember the pictures outside the offices when they basically did a big deal with Kingfisher, with Asda. Everybody looked particularly happy. That's Geoff on the left there of your screen with Alan Layton who I think has now gone to lastminute.com. That deal was announced with a great deal of fanfare. A lot happened around it. The Kingfisher price was right up at its peak. We go back to the share price graph, you can see that right up at its peak in terms of the share price. However, 2 months later, what happened was that Walmart came in. I remember asking Geoff at the time, do you think Walmart will come in? He said, absolutely not. This is a great deal for shareholders. It's a great deal for our shareholders going in with Asda. Walmart came in a couple of months later, and look what's happened to the share price ever since. Not a pretty picture. Basically, a couple of months ago, September, the company said it was going to split itself up. They'd come under so much pressure that they had to do something, and as a result of which they said they were going to split the company up, which Geoff had built up. A couple of months ago as well, actually a few weeks ago, the chairman then announced he was resigning. This is why we are going to have an interesting AGM today, because I think everybody wants to know what the hell, Geoff, is going on with Kingfisher right now.
One of the interesting things here is that, I mean, it's very obvious from that share price chart that the decline has taken place since management failed to do that deal. And in the UK in particular, across sectors, we've seen a number of businesses that have not managed to do deals, and the share prices have suffered consequently. In this case, I haven't heard any institutions start to raise issues about Geoff Mulcahy's stewardship. I'd be interested to see whether this smokes out one or two fund managers into suggesting that maybe it's time for him to move on, or perhaps we need some new blood in the business. Isn't the chairman going?
The chairman's going, yeah, but Mulcahy apparently a few weeks ago re-signed for 3 years. Now he's as one reporter put it, he's getting on a bit right now, and many people had expected him to go within sort of 12 to 18 months, but he's re-signed a 3-year deal, I think. But the interesting thing is the chairman's gone. That really shows the signs that there is obviously stress within the company, within senior management. But it's interesting, as you were saying, a lot of companies coming under pressure in terms of not doing deals. Like Cable and Wireless, a classic case. It's done very well on the disposal side, but can't make the acquisitions. Kingfisher has done very well on the acquisitions front, but just doesn't seem to be able to make these disposals. I know that Mulcahy wants to get rid of the businesses for cash, and many people had said, well, that's going to look a bit excessive given what many people may want to pay for the businesses. And some people were saying, well, actually, basically a spin-off might be a slightly better route. But that seems to have been fairly well resisted. But I think the AGM later on is going to be absolutely fascinating.
Yeah, just give us a deal. A deal. That's what they want to hear about.
If you're looking for a lot of cash, it's better to hang on. You know, let's get out of the short-termism. If he is trying to sell Superdrug, if he is trying to sell Woolworths, you know, maybe he's trying to get the bidding war going.
But it hasn't taken off. There's been absolutely no interest in the business whatsoever, and the share price has continued.
The Dutch were
well, they are, but they originally wanted 350 million euro, 350 million pounds. It's understood that the Dutch only want to pay 220, so there's quite a big gap there.
Yeah, but he's far better to walk away at that stage than say, okay, I'll take your lower price.
But he's already made it clear that these businesses aren't performing. We've got to split the businesses up. We've got to restructure the business.
You don't want fire sale prices, do you?
No, you don't. But on the other hand, is it not better to get the deals done and move on rather than sit around and wait?
Let's go to our fixed income guest. We need to have a chat about what the ECB is doing. I would just throw in at the end, all the while they're waiting, margins at Superdrug are declining. They've got problems with this recent ruling in the UK over over-the-counter sales. We'll come back to it if you want. If you want to talk about Kingfisher, you've got stock, right into us. Stefan Bauknecht is a portfolio manager at Deutsche Asset Management. Stefan, no change at the ECB today. What do you think?
We don't expect that ECB will not lower, or we don't expect ECB will lower rates. Since they made a surprising rate cut 2 weeks ago, there is no further rate cut in a pocket for today.
Can I ask you what you think of the, I mean, they're going to be gathering behind you in that building. You're stood in front of the building where the European Central Bank members are meeting.
Right.
If you could get into that meeting room, what would you tell them that they need to be worrying about?
Actually, I mean, I wouldn't recommend to lower rates today. I mean, it was really shocking for us to see them lowering rates 2 weeks ago, since they always had argued they follow their two-pillar strategy, which means they keep money growth and inflation rates in check. Money growth don't seem to be a problem at this point in time. but the CPI numbers and the PPI numbers point towards higher rates. In fact, we saw Brandenburg yesterday, figures came out with 4.1%, and Italian city numbers came out with 3.0%, which means inflation is clearly accelerating at this point in time. So they shouldn't lower rates now, they should wait until maybe mid of June.
Which begs the question, of course, why do you think that they did lower rates a few weeks ago?
Okay, I mean, we had been surprised, as I mentioned before. I think from their statements following, they had the inception to put a pressure from the markets away, since the market was already pressuring for them lowering rates for many, many months ago, and they had been falling up behind the curve a little bit. So I think after the market realized they were not lowering that early, I think they had no pressure, and then they basically did it basically.
Stefan, thanks a lot for that. Stefan Bauknecht, portfolio manager for fixed income, joining us there. Let us tell you what's coming up. Chris Locke will be along. We will talk about a technical view on the US markets. We need to get you some world news, and we'll talk to a Microsoft vice president about their call on technology sales in Europe. They're still fairly upbeat, despite what the trends would suggest. We'll be right back. Welcome back, everybody. This is Squawk on CNBC Europe. Let's give you a time check. It is 8:30 in Paris and Frankfurt. Let us give you the headlines. The European Central Bank will be gathering today. We are not expected to see any change in interest rates at that session. We should have a result about noontime in Europe. We are expecting a report today from EDF, set to announce that they are now the largest shareholder in Italy's Monte Edison. Rome on the warpath over this, concerns that France is not allowing other electricity companies into its own domestic market. And Ford has announced a huge recall of 13 million Firestone Wilderness tyres. The company is taking a $2.1 billion charge after confirming that recall. The decision comes after Ford's own analysis showed a substantial failure risk. Let us tell you what the spread bettors are saying as far as the call for the markets go this morning. The FTSE down 30, DAX down 10, CAC 40 down 10. I would imagine that we would see a slightly more positive view on the tech indices, but that's where we stand at the moment. Probably a lot of that to do with the way the Dow closed yesterday. Let's kick it out to Simon and Guy at this point. Boys, what you got?
Do you want to kick off?
I'll kick off if you want. Yeah. What have we got? We've got stuff coming through on Boeing. The story I know you were talking about a little earlier on about this joint venture possibly coming through with BAE Systems. Anyway, basically what the deal is here is that there's a story in the FT this morning saying that Boeing and BAE Systems are going to come through and talk about the fact they're going to do a joint venture. This is basically as a result of the lack of tanker capacity around the world. And what these guys are going to do on the 767 airframe is they're going to develop a new tanker. This is going to compete with an EADS consortium as well. There has been a suggestion, and BAE Systems may get together as the result of this. However, apparently, basically Boeing has said that it's not a prelude to a merger. We have had a statement through from Boeing this morning saying that the joint venture is going to kick off within the next few months. The interesting thing that I think this acts as a really good prelude to is Friday, when President Bush is going to stand up at the Naval Academy in Annapolis and talk about his new defense plans. The key thing for BAE Systems in this is what is going to happen with the Joint Strike Fighter aircraft. We are in the prelude and the run-up to the Paris Air Show as well. Beware of that, because we may get news flow coming out then. But Annapolis on Friday is going to be absolutely crucial for the Joint Strike Fighter. Many people had expected the program to be cut. Interestingly enough, and I think this to a certain extent slightly pours cold water on the current rumours that are being done about BAE and Boeing, is that actually within that program, BAE Systems is partnered with Boeing's main competitor, which is Lockheed. Lockheed's version of the Joint Strike Fighter, of which around 5,000 are going to be produced, is where BAE Systems has really decided to sort of make its nest. The UK is going to buy around 150 of the aircraft, which is going to replace the Harrier aircraft. So that is something to look forward to on Friday. Could have a really big impact on BAE Systems' share price. It's going to protect around 5,000 jobs in the UK. So just watch out for that one. Could be kind of interesting. I just want to talk to you as well about Lafarge. Let me just save this and we'll be able to give you the details of it. Let's just lose this off the screen. Great stuff. And then we'll take a little look at that. Lafarge, which remember, second time lucky for Lafarge, got round to acquiring Blue Circle. This is a big cement, business. And basically has come out this morning and said that it's going to sell some of Blue Circle's assets. Let's lose this off the screen here as well. And we'll be able to show you the Lafarge share price. Now, just staying with the cement business, we have a new company. Well, not a new company, but a new logo on the block. I don't know if you can get a shot of this over my shoulder. But we hold this up. See if we can get a little shot of that over the shoulder. What do you reckon that's the logo for? Geoff?
Tell you what it looks like. It looks like a euro tilted.
It does look, if you sort of did a bit like that.
What one assumes that this belongs to a company that sits comfortably within the eurozone.
Well, you would have kind of thought so, wouldn't you? What do you reckon that looks like?
It looks like a euro about to topple over, actually.
It does look like it's sort of a bit's about to fall over. This is the new logo for Holcim. Now, I made a bit of an error a few months ago, which everybody pounced on and had great fun with, relating to a company called Holderbank. That's Holderbank's share price over the last 12 months. That looks a bit odd, doesn't it? Anyway, basically, we've now got this company. It's changing its name because everybody thought it was a financial institution. It is now going to be called Holcim, and that is Holcim's new logo. It does look remarkably like a euro, doesn't it?
It does. It does. In fairness to them, that's a 3D. That's a 3D thing. If you, on the letterhead,
yeah, on the letterhead,
it's
it does
not
look a bit
so much
different,
like a euro. Maybe they're just trying to say we're very.
Well, maybe they're
Can
just
you get that? Is that too far in?
This sort of here, I think, is what we're looking for.
See, when it's not in 3D, it's sort of not so confusing. But when they do the nice big one,
what still escapes me is how this relates to cement. To be honest with you, I mean, if it doesn't look like a euro, it looks like a strange kind of plug.
Well, you can see that it's sort of HC, can't you? There's the H there, and then there's the and then the sort of C there, I guess, which is the idea. But it still, to me, sort of looks vaguely sort of euro-like. And I think maybe they're trying to send a signal out to the Swiss government, maybe. I don't know. We are an international business. We are part of Europe.
Can I talk about something else?
Yeah, you can.
Which I'm thankful for Dan Scott over in Frankfurt for drawing to our attention. This is a research note that Dan was part of a research note that he was handed by Merrill Lynch analyst Andrew Griffin yesterday. Infineon CEO did a lunch presentation to the buy and sell side analysts in which he reduced his expectations for the current quarter and fiscal year. We lowered our estimates and recommendations 3 weeks ago to well below consensus, but we believe that the consensus numbers will have to fall towards our estimates, which are for basically a tenth of a euro, 10 cents earnings per share in the year ending September 2001, and 0.44 euros for the following year. Now, that's fine. Did you catch Infineon's share price yesterday? This is what happened to it. So, just to clarify, we reach lunchtime, and the CEO of Infineon takes it, but whoever he chooses, just a little select few from Merrill Lynch, presumably there are others there, and he lowers his estimates for the company at a lunch. In the United States, that would be illegal. And it rightly so is illegal. Because if you have information that is going to move a market, you make it public to everybody, do you not?
Without a shadow of a doubt.
Because that is the fair way to do it.
Fair disclosure.
Fair disclosure to everybody. That is, Philip, that is not what they did yesterday.
No, it isn't what they did yesterday, and but it's what goes on all the time, as you know. And what's publicly legal and privately illegal is the nature, I think, of the stock market. So it trades on information, always has, always will. I don't think there was any intent there to manipulate the share price, and that really is what, of course, your point of issue is. However, there are obviously people who gained, and someone would have made money out of that. There's no question.
And somebody lost because if say I'd been really on the case and that news had broke, I could have sold potentially at the top of that. Potentially, I don't hold Infineon shares, but potentially at the top of that. Now I've lost money, and I've lost money unfairly.
There's nothing on any of the wire services, is there?
There's nothing on the wire services to that effect at all. Were it not for Dan Scott, we'd be none the wiser as to what exactly happened.
No, I don't think the move has been that dramatic, although the chart, of course, within a narrow pricing band along the axis looks as though it has. In fact, in percentage terms, it hasn't been. If it was a 10 or 20% move, I think that would be a fair point, Simon. And I think it's a fair point overall. Obviously, the chief executive was at fault, and he should have made a press announcement, not to a private band of analysts being privately entertained.
Tell me, Philip, who can we actually turn to and say, now, look, we need fair disclosure rules around Europe? Who will institute that? Because, frankly, most of the stock markets seem to be, I mean, a lot of them are mutually owned by those that trade in them. It's not necessarily in the general public. They are not necessarily arguing for the general public. It's got to be a regulator. It's got to be somebody who comes from the political sphere. Is there anybody on the horizon who is going to give us decent, fair disclosure rules across Europe?
Well, I think you're asking for a European watchdog, and,
yes,
and I'm not aware of one at this point in time, which is, of course, highlights one of the great problems that Europe is. It's not a homogenous marketplace. As you know, it's a regional marketplace, and it's going to be very interesting to see whether that homogeneity comes to bear over the course of the next 12 months. You're making the point, and I think you're right. It needs to pretty promptly, based on evidence like that.
I think people need to, I mean, I just wanted to chip in on this because I think Schumacher at the helm of Infineon has been a thorn in the side for Heinrich von Peer at Siemens. You remember the episode well, Simon, I think, where their ADRs hit the market and then Infineon came out and started
I'm sorry.
down.
In fairness, that was not Infineon's fault. That was Siemens.
No.
Yeah.
That was Siemens who came through, floated on the New York Stock Exchange, and then the next day said, oh, by the way, we might not meet our estimates and we blame Infineon. Then Infineon releases a press release saying, oh, nothing's changed as far as we can see.
Isn't this just
Well,
part,
then that is different to my recollection of the history. Because
Well, then
I thought
I may
it was
be wrong, but
Infineon.
I may be wrong.
I thought it was Siemens put the ADRs on the market, and Infineon then came out within 24 hours pretty much and said, you know what, we're not feeling so comfortable with the outlook going forward. But what I want to get to on this is the question of supply, because I think von Peer has made it very clear that he is going to put more shares on the market or in the pension fund or wherever. And on a supply story, that would seem to be negative for Infineon going forward.
Isn't there an issue here as well, Geoff, that actually this is just part of the sort of tight German corporate culture that we have as well? We've always had these cross-shareholdings. Everybody's always had a very cosy relationship with everybody else.
Oh, well, possibly, I suppose. Philip?
It's awaiting a, if you like, a restructuring. It definitely needs to have a dilution which has served Germany extremely well post-war. But the day is up. We're now a Europe, quote unquote, supposedly, not a Germany. And the German share structures need to be unwound. They're not being quickly enough, and that's, of course, symptomatic of a lot of the restructuring that isn't happening in Europe quickly enough.
Let's get a technical view on where these markets are headed, particularly the US. The Dow fell last night for the first time in 5 days. The Nasdaq did continue its upward trend. Chris Locke is the managing director of Oystercatcher Management. He joins us live from Amsterdam this morning. Chris, nice to have you with us. What is your position on the US market at the moment?
Well, over the last week, since last week when I spoke last Wednesday, the markets have made a good push through these levels that I talked about. We were talking about a break last week above 11,100 on the Dow, on the Nasdaq 2250. And on the composite hourly chart, as you see, we've seen a move above 2250. We have a resistance level around the highs of yesterday, around 2330, 2350. This is really still showing it as a wave 5 count, with the count sort of being moved back to the right-hand side, with still the momentum still slowing. So it's is it a rally that I go along with? I do go along with it. Would I sell the farm and bet everything on this rally? No, I wouldn't. Would I run close stops in it? Yes, I would. So we've had a break on the Nasdaq at 2250. It's a run that could take us up to around the 2630 level on this spring-summer rally, which is 38.2% of the retracement of that wave 2 down to wave 3 that you see on there. Stops, I say again, place the stops very close on this move. So if we broke above 2250, that's the level of breakout. Stops under the 2200 for very close levels. Under 1960 would not be good, and that will suggest to me that wave 5 is upon us, that could take the market to a new low. If you look at the Dow Jones chart, the Dow we saw last week, that level break above 11,100 or so. The market is set possibly to peak up around the 11,400. If not, we've already sort of peaked around those levels. For the next move up, we need to break 11,400. That would confirm moves to new highs to around the 12,300 level to the upside. If we fail back under 11,000, that would not be a good scenario. And that could mean that we retrace all the way back to that point E that you see on the chart, which is a level below the 9,100 that we saw in March.
Okay.
So we have to hold these breakout levels.
Chris, hang on there. Let's bring in Philip Manduca on this. You have a question.
Chris, morning, Philip Manduca.
Morning, Philip.
I think it's.
Hello.
I think the Elliott wave theory has a lot of merit on occasion. On those occasions that I particularly believe it has merit is when it's measuring public sentiment. It worked very well, as you know, for the Prector people in the 1980s when they were measuring the initial stock market rally, and of course that's when it came in vogue. So I'm more interested in your analysis of the Nasdaq as it reflects public sentiment than I am currently of the Dow. And just coming back to those Nasdaq charts, I think what's interesting for the viewers here, Chris, and you have had some accuracy in projecting or predicting where these markets are going, is more in a sense of one, the conclusion that we don't feel we've seen the lows. That's what you're saying, isn't it? That we haven't seen the lows yet. That fifth wave has got to come yet to the downside. But B, I think what's more interesting, the timing of that. When do you feel that we will start seeing the next major down wave to either the lows or new lows in the Nasdaq?
I believe that we're in a spring-summer rally and a spring-summer rally only. I think at maximum this market will top out around the end of June, beginning of July, and I then believe that the market will start its move back to the downside. We could also be topping around these numbers, but I think the maximum extent of the rally in terms of timing, for me, will be into the beginning of July period. From there on, I expect the market to be well on its way down to testing the lows that we've seen already this year.
Notwithstanding, Chris, what Philip has said about its usefulness to the Nasdaq, could I ask you what it's telling us about the S&P and the broader market activity?
Yes, as far as the S&P is concerned, again last week we saw this break or neckline break up through 1275 on the cash, and it's unfolding again as what I think is an ABC correction in a larger wave 4 pattern, with the potential for another sharp move down once this rally is over. For the moment I go along with it. For those sort of stopped in around 1275 on the cash, you can even bring stops up to just under the 1300 level, 1294 or so. Under the 1240 level, then I think that will be a sign that we're on our way back to levels of 1100 or so.
One last question.
For the upside, yes.
Chris, one last question. I don't want to keep you, I don't want to get you off script too much, but I know you look at all the markets, and people have been talking a lot about reflation, maybe even inflation, something I vehemently disagree with, but who am I to know? But what I'm more interested in is what your view is on gold here. On the gold, I do believe that we have, or we are complete in a very long-term count down, a 5-wave completion on daily, weekly and monthly charts. For the short term, the 290.95 represents a major sort of resistant level of resistance. And I think as we sort of come through August, I think August is going to be, for me, in terms of timing and cycles, an important level, more important than now. In other words, this is a short covering rally at the moment. Breaking the 295, we could see that extension to 320. But I think that the next stage will be, is it accumulation or is it going to be an accumulation of longs once this sort of short covering rally is over? And I think as we get into August, it will become sort of more clear to me. On the long term, I do think that the 250 level represents a very low price. And I think from there on, we will see rallies in the longer run to at least to 320, possibly to 350 and higher.
Briefly, Chris, let's just finish with the euro if we can. I'd just be interested to know what you think is going to happen.
Well, as I suspected, the euro is really starting to test the downside. We took out some key levels yesterday, the 87.30, 87.50 level. And I do believe we're really on our way down, probably into weekly cycle lows around September or so, which will time with the highs of the dollar. And we could see levels back to sort of the 75 cents on the euro. So I have a very negative outlook on that. Only moves above 90.50, so that will be the stop level on this point. Only moves above 90.50 would negate this bearish euro scenario.
Chris, thanks a lot for that. Chris Locke, Managing Director for Oystercatcher Management, joining us live from Amsterdam. We'll be back with you in just a moment. Despite what we hear about technology spend, Microsoft feels the outlook for European companies is more upbeat, and I presume that means they think they're going to sell more software. We'll be back with you in just a moment. Simon Witts is a Vice President for Microsoft Europe, Middle East and Africa. We'll ask him what this is all about when we come back. Welcome back, everybody. This is Squawk on CNBC Europe. I'm Geoff Cutmore. We're about 9 minutes away from the start of the European session. Let's talk a little bit about the outlook for technology. Despite high-profile warnings by Sun Microsystems, Hewlett-Packard and Dell that the decline in US IT spending will spread across the Atlantic to Europe, a survey commissioned by Microsoft seems to be swimming against the tide of corporate spending and job cuts. With us is Simon Witts. He's the Vice President of Microsoft Europe, Middle East and Africa. Nice to have you with us, Simon. You've got a hard sell on your hands here because everybody will say, well, Microsoft would say that, wouldn't they? It's one of these self-fulfilling prophecy type stories. You're not going to come on and tell us no one's buying software or technology these days. Well, how do you justify this?
We actually just ask customers. It's what we hear every day, but this survey of 500 large customers told us that most of them, 60%, don't see an economic downturn, but more importantly, they see technology as the biggest business driver, even above the economy. So actually, IT budgets are being preserved, or in some cases, going up.
What is the margin for error, if I can ask, that you factored in here? Because I would guess this is a bit like, asking people if they beat their wife. They're always going to tell you they don't, even if they do. In this case, you're asking them. They're a customer, they're going to tell you that they're going to sustain their spending on technology, surely. And nobody wants to be seen as not buying new technology, do they? That makes them sound like an old-fashioned company.
Yeah, well, it's IDC who posed the question, what's driving business, which then went down the path of the fact that IT investment is seen as a board-level issue and critical in terms of competitive. So I think it's divorced from their relationship with us or their view specifically of the economy.
Surely there's a skew here, though, because you're asking customers, and the very fact that they are customers means that they're spending. Surely you should be asking non-customers too, or people, or companies that have been customers that maybe aren't at the moment. Maybe that would give a better and broader perspective, because customers, by definition, are spending money.
Yeah, well, remember, this is a CEO study. It's not necessarily asking the CIO about their IT budgets. And I think because it's a boardroom issue, because it's the #1 business driver, the CEOs are saying as long as it makes sense every step of the way, competitively will remain invested and taking part.
Just to correct you, it does say on here CIOs and CFOs were asked as well.
Yeah, it's a mix across 5 countries, that's correct.
Let's bring in Simon at this point.
Mr. Witts, sorry, what your survey's actually found, therefore, is that people are going to maintain their expenditure. Is that correct?
Yeah, 9 out of 10 people we talked to said that the IT budget was either preserved or going up related to internet technologies and the overall IT budget, yeah.
Right, so does that mean to say that the rest of us can expect to see people missing their targets? Because in a situation where obviously you've got various earnings targets to meet, you might expect, because of the short-termism of the stock exchange, that people will cut back on that sort of thing. Are you now categorically assuring us that that is not the case, and therefore one assumes that perhaps some people will miss?
Well, again, what our customers are saying here is that because IT and internet is the biggest business driver, you're absolutely right. They will preserve spend at the cost of maybe other lines in their P&L, yeah.
One of the things that stood out here that was worrying for me and perhaps represents the truth that shines out of the survey, if I can be so blunt, is that only 14% think that IT increases revenues and profitability. In that you find the story of why we've got technology companies reporting they're seeing capex decline and they're not making the sales.
No,
I mean,
you're
despite
right.
what you seem to be telling us as the headline on here.
No, you're right. They're saying that their IT goals aren't borne out in reality, that most of them are seeing internal efficiency gains. But as they move forward and put more customer relationship or supply chain solutions in place, it's easier to relate that more directly to the impact on the bottom line. So I think that will go up over time rather than just looking at internal efficiency.
Okay, nice to have you with us. Simon Witt, Vice President for Microsoft Europe, Middle East and Africa on that business survey on technology spend. Simon, what you got?
I just wanted to highlight, Geoff, just as we come towards the open of the European markets, the way in which the euro and indeed the dollar appear to have stabilised against the yen. We are down now 1% as this yen strength emerges, as you can see, but at least we appear to have hit a bottom, as it were. Apart from that, as we head our way towards the European Open, I don't think there's any clear signals as to where we're going to go at the Open today. Certainly not from the United States. Some good, of course, results after the bell, but not enough to drive the futures market. So it'll be very interesting to see where we take it. Of course, a lot of controversy over in Italy, with the French heading that way in the form of EDF, and the big one, the Inditex IPO. We're live from Madrid this morning, Thursday morning, Wednesday morning on CNBC.